Hello, this is Ahura from Oted Markets. We'll be with you with a short review on global economic in the week ahead, which is going to be the 30th week of the year. First of all, let's see what we had last week. Then we can check the data in the week ahead. Last week, we had a very busy week, both on the economic calendar and the events that we had. On Monday, the Chinese data showed that economic growth in China in the second quarter is less than expected. It's slower than expected, which we were talking about that in the past months. On Tuesday, we had the inflation numbers from Canada, which showed that inflation, the headline inflation is getting lower, is falling by 0.1%, but the core inflation is getting stronger and increased by 0.1% compared to previous month, from 1.8% to 1.9%. So generally the headline inflation is falling by 0.1%, but this core inflation is increasing. So it's a mixed data which can put the Central Bank of Canada on top for the meeting that we'll have in the week ahead. On the retail sales, we had a retail sales data from United States. The data showed that the retail sales generally they were better than expected. The same thing that same positive data we had from other parts, especially from the retail sales and the housing market from United States last week. Generally, the data from the United States last week we were a little bit better than expected, showing that despite that, while that the economy is getting slower, but still we have some positive numbers there, and we can count on them. Then we had the housing numbers, as I told, and then from the inflation, we had inflation numbers last week from Europe as well, from Eurozone, and from British. Yeah, so here, let's go. Here we had British inflation, Eurozone, and also the New Zealand inflation numbers. In New Zealand, we saw the inflation fell to 3.3% from 4% in which we had the first quarter. The 3.3% in the second quarter is a good number for New Zealand, and we can probably expect the Reserve Bank of New Zealand to cut their rates in the next meeting. In the United Kingdom, the inflation was still at 2%. It's very good news for British economy, and most probably we can cut the rates in the next meeting. In Eurozone, also the inflation was somehow steady, but generally for core inflation, but the headline inflation fell by 0.1% from 2.6% to 2.5%. In Japan, the trade data, they were a little bit positive. You can see that mostly because of the more export that we had based on weaker Japanese yen. And then, the main meeting of the last week was with the European Central Bank meeting, which showed that the inflation, the interest rate is steady still at 3.75%. Different inflation for the ECB it's depend on the different inflation that we had, different interest rate that we have. Deposit facility is 3.7%. We have the main at main or target rate at 4.25%. Generally, the data they came as it was expected, and we had no surprise in the data from the central bank in Europe. Sorry, I had a message from my phone, a little bit my mind was blank. Okay, let's go back to the data. Yeah, the central bank meeting in Europe had no surprise for us. We were expecting the same numbers and the same decisions, but most probably in the next meeting, the central bank will continue its rate cut, which it had the previous meeting, and we'll have a 25 basis point rate cut in its next meeting. Then on Friday, we had a retail sales from Britain, which showed that the retail sales is falling. Weaker retail sales from the United Kingdom, plus there's kind of the controlled inflation. Both of them, they can tell us that the most probably Bank of England can cut its rate in its next meeting. But also we had the retail sales in Canada, which showed that the retail sales also in Canada fell by 0.8% in June, which means that in annual scale it's lowering by 1.3%. With lower inflation, with kind of with the mixed data in inflation and with the lower retail sales, Bank of Canada will have a hard decision to make for its rate cost policies. interest rate policies. In the next meeting, in the next week, first of all, let's see the next week we'll have central banks meetings, different central banks meeting. On Monday, the Chinese central bank meeting after the weaker data that we had, we'll have a meeting. We don't expect to see any changes in central bank interest rate. Most probably will not have a changes in interest rate, but the central bank probably will give some more options for somehow the support as it like to support the economy that in China, which is getting weaker. Then on Tuesday, we will have the central bank meeting in Turkey, which is expected to hold the rates at 50%. Probably it's the last meeting that they held. They will hold the interest rate at the 50%, and then they will probably start cutting the rates because such a high rates for a long time that they have is kind of the killing the economy here in Turkey, and it's not something good for the country's economic development. Then on Wednesday, we have a central bank meeting in Canada, where we are expecting to see the holding policy again, as I told. Inflation is mixed. The overall inflation is the headline inflation is falling by 0.1%, but the core inflation is increasing from 1.8% to 1.9%. But at the same time, the retail sales also is falling. Is so weak. They will have a hard decision to make, but generally the market expecting to hold the Canadian central bank to hold their rates as they already cut the rates previous meeting, but most probably they will hold the rates right now, but they will give us some signs about the rate cut in the next meeting. Then yeah, on Friday we will have a central bank meeting in Russia, where we are expecting to see 2% rates hike. Inflation is a little bit increasing in Russia, but the economic growth is fine, so they will give a room to the Russian central bank to increase their rates. Most probably we'll see the higher rates by 2% from 16 to 18%. That can help a little bit Russian ruble against US dollar, which is getting weaker as well. This is central bank, but besides the central bank, I have to tell that the last week we had also too many events across the world and the data which we have to talk about that before going forward and talking about the economic calendar. I have to mention that the last week we had Republican meeting in the United States. Mr. Trump already accepted officially to be the nominee of the Republicans for the next presidency election, which is going to be the November this year. That's a little bit kind of the somehow making a mixed emotion in the market right now. There is a more chance to Mr. Trump to win the election. Mr. Trump is usually known as a supportive policies. He has a supportive policy for economy, which means that stock lower tax, lower rates, so that can help the economy to that at the short term to increase, but also it can put the US dollar under pressure and also increase the inflation, which we will see what's going to happen if he will be elected. Then also on Friday we had the problems that we had a security problem of the Windows, which caused too many issues in in many countries, especially in Canada, United States, United Kingdom, and some more other countries. That a little bit put the more pressure actually on tech stocks, and tech stocks fell more. We will talk more about that when we go to the charts. But generally, the data we had, they were not some the things that happened. This was not good for stock markets. And also on top of that, we had a news from Gaza, that Israel and Gaza, they are getting closer to ceasefire, as Antony Blinken, the foreign minister of the United States, announced that they are so close to make the decision. Probably they will get agreed. They will try to agree on something, some ceasefire that they were talking like in recent months. So that helped the markets tensions to a little bit lower, to get it slower. In the next meeting, in the next week, on Tuesday, we'll have the existing home sales from United States on Tuesday, but also on Thursday. Also, we will have the new home sales. Generally, for both existing home sales and new home sales, we are expecting a little bit better than expected numbers, better sales. But the main focus of the week on Wednesday, generally, if I say, will be on the PMI numbers. The PMI numbers on Wednesday from United States, United Kingdom, Europe, and most developed and developing economies will tell us how generally the economy is improving. that's very important day on Wednesday. It's a very, very important day this week. And then on Thursday, we'll have the GDP and raw GDP numbers from United States for the second quarter, which we are expecting to see 2% economic growth. But that can be a little bit better than previous expectations, but still it's lower than the average that we have 2.4%. So the general that shows that economy is improving fine, but with less speed. It's like with lower speed. Also, we'll have the durable goods orders, which is expected to increase by 0.3%, the headline, but excluding the transportation, probably we will have 0.1% durable goods orders, which shows that again the economy while the economy is increasing, but still it's getting a little bit weaker with the slower speed. On Friday, but the most focus on Friday will be on the personal income and spending and the PC price index. The personal spending is expected to increase by 0.3%. Personal income also expected to increase by 0.3%. But the both personal PC price index and core PC price index both expected to increase by 0.1%. But still, if we see that, it means that the both PC price index and core PC price index will remain unchanged at 2.6%. Again, will turn on the alarms on the market that the inflation is falling, but still we have a hard way to get to our 2% target. That's the overall data data we have for the next week to watch. Let's go and see the charts. What we have on the charts. This is the Bitcoin chart. As you see, the Bitcoin increased last week. There are two or three news that helped the Bitcoin. Some influencer, they had a positive and positive post on the X social media, which helped the general overall sentiment on the market. Also, the more chance for the election for winning the Mr. Trump in the election means more supportive. Probably more supportive policies for the cryptocurrencies, because in the last month he was somehow the positive about the cryptocurrency, especially about the Bitcoin. And also we had a crypto platform which was giving back their what was it? Yeah, MTGOX, which was like giving back the Bitcoins and Bitcoin Cash that it was hacked like a few years ago. The most people that they got their Bitcoins, the more than 50% of them, they told that they have no plan to sell the Bitcoins that they are getting from the Bitcoin, their own Bitcoins that they're getting back. So which means that the supply in the market will not increase that much that people were expecting. So lower supply, at the same time, a little bit weaker US dollar, and also a positive sentiment in the market. All of them, they help the Bitcoin price to increase. As long as it's above 62,000, we're expecting to see 72,000 US dollar once again in the next weeks. On gold market, I have to say that the gold was, despite the falling on Thursday and Friday, gold is still positive, weaker US dollar, lower US bond yield, and falling in the stock markets, like shortfalls that we had in the stock markets. All of them, they help the yield metal to increase. And generally, still, we are in an uptrend. The gold is still in a demand, despite unlike the falling that we had on Wednesday, Thursday, and Friday. But still, the gold is getting stronger, and we're expecting to see higher prices even with after the short recovery correction. On the oil market, the case fire from between the Gaza and Israeli and one, weaker economic data from China, and falling stock markets. These three reasons, they help together to put the oil price under pressure. But still, $78 is the main pivot point right now here from the technical. If you see as a technical, if you see the technical chart, $78 is the main pivot here. As long as the price is above the $78, we can expect the higher numbers. But still, we can say that the oil price is under pressure with the weaker economic data which we had from China and other countries. This week on Wednesday, we have the PMI numbers. If we see the better than expected PMI numbers, probably we can see higher prices as well. Well, on the stock market, let's see the stock market. Check the S&P 500 for as okay. This S&P 500. We can see the price is falling under $5,520, which is it was the first main support that we have. We had actually it's not a support anymore. Right now it's the first resistance. The next support is at 5,440. If we fall below the 5,440, we can say that the trend is changed. Otherwise, still there is a chance for recovery, and in a bigger picture, we can say that the S&P 500 is increasing. But in the short term, the price is a downtrend, and the expected data and earnings that we have in the week ahead, we want to see more pressure on the stock markets. Actually, in a week ahead, we have we have earnings from the tech companies, which probably can support them somehow. But in the second half of the week and next week, when we have more earnings from the producing company, from the factories, which they have a product. Physical product, then they can put some pressure on the stock market's movements. Just the general market condition and expectations. If you had any question, please don't forget to write down in the comments. I will try to get back to you as soon as possible. Have a good week ahead. Bye.